Hi there, I'm Mike Larson, Editor-in-Chief with MoneyShow. Today I'm speaking with Shannon Robnett, CEO of Shannon Robnett Industries. Shannon, how are you?
Good, Mike. How are you?
I'm doing well. I know it's exciting here, a lot of traffic and everything. Glad you could take a few minutes of your time out to talk. Let's talk a little about what you do, real estate development. Where are you involved? What's your background in this industry?
Well, Mike, I've been involved in real estate development for over 30 years. I'm a second-generation developer. My father was in the industry until he retired. My mother was a third-generation real estate broker. I'm a fourth, my son's a fifth. So we do things generationally in my family, and so I've been doing this for quite some time.
Got it. Let's talk about this real estate environment. What is the market conditions out there that you're seeing? How do you think things are evolving here?
Well, it really depends on what news channel you're listening to as to how the market's doing, but the reality is, there's almost 10 million housing units in America that are apartments, and of that, less than 100,000 are in distress, but the news likes to pick up on that cycle. We also know that we're somewhere between 4 and 6 million housing units short in America now, and the only way we're going to solve that problem is by continuing to build and develop new product, which is where we come in, because I love the Class A apartments because they provide the best value for the tenant that's got the most discretionary income.
Got it. Now, what markets are you involved in?
We're involved in the Boise, Idaho market. We're involved in the Houston, Texas market. We've got product in Florida as well as Washington.
Got it. Okay, let's talk a little bit about one of the things you're going to be speaking on here, and that's the tax benefits, why you can't ignore that when you're investing in your sector. Let's discuss that for a bit.
Well, Mike, the two biggest things that people deal with right now is inflation and taxation. And both of those things affect your returns. And when they do that, you have less investing power. So the thing that a lot of investors need to do, first of all, is they need to prioritize that tax savings so that their investing amount is larger, and then look at their returns. But in retrospect, most people look backwards and they say, I made this much money, now I have to pay this much taxes, and they do it in a reverse order that really hampers their long-term growth.
Got it. And you brought up inflation. You talked about in your presentation the inflationary environment we're dealing with. Would you expand on that?
Well, the reality is that we're being told that it's 5% inflation. We all know, we feel it at the gas pump, we feel it at the grocery store. It's much higher than that. But if you're going to think that we're ever going back to a 2 and 3% inflationary environment long term, you probably ought to have your head checked. And the reality is, if you're not figuring that into your equation, what your parents and my parents were looking at retiring on $1 million was able to do for them, we factor that in at a 5% growth rate every year. We're going to need to be way higher, and we're going to need to compensate for that in our strategy, which a lot of people haven't done because inflation's been 2.5% to 3% for a very long time historically.
Got it. Let's assume maybe somebody's watching this, the only exposure to real estate is they invested in a REIT at some point in time. How is that different from the opportunity they have in the private markets and the things that you do?
Well, a REIT has, they're a publicly traded company. They have hundreds of lists of offerings. They've kind of put it all together, and they go, hey, we've got apartments in Tallahassee, we got stuff in Denver, and it's all part of one big group, and depending on how the group does, we can kind of hide some bad apples in there, and it still performs okay, right? The reality is what we do is we invest in individual projects. So if somebody joins one of our syndications, they're going to be joining us in that particular project, in that particular city. So if your flavor is industrial, you may not want to be involved in one of the markets that we're in with multifamily. You may not want to go to Raleigh, North Carolina for multifamily. You may not want to be in the Houston market for industrial if multifamily is your thing. So it gives you a lot more flexibility as to what specifically you get into and allows you to pick and choose more so than with a REIT.
Fair enough. Let's talk a little bit about the Capital City Growth Fund, one of the things you're raising for now. What is that project? How is it involved? And if somebody wants to get involved, how do they do so?
Well, right now we're seeing a lot of projects, I heard the term floating around, they're stranded. They need some additional capital, they're looking for short-term money. Those are the kind of opportunities that provide high yield for my investors without a long-term tie-up. So we've got different opportunities there with the Capital City Growth Fund that allow you to invest from 18 to 36-month windows, and you're able to get up to a 15% return on that, and it's cash on cash, paid quarterly. So it's a pretty simple deal secured by real estate, and so you still have that that backstop on there of a real asset behind what you've invested in.
Got it, got it. If somebody's not here, unfortunately, they missed your talk, which they shouldn't, but if they did,
you know,
and they're
everybody
watching
needs
this,
a little forgiveness.
There you go, there you go. Where can they go for information?
You know, ShannonRobnett.com is where you can find most of the information. You can see our past projects, our current offerings, all of that is there. You can get a copy of our newsletter. Love to chat with you further right there at ShannonRobnett.com.
Excellent. Again, thank you for taking some time out. Very busy here. Best of luck to you.
Thanks, Mike.